The Precious Metals Week in Review, May 27, 2016. Brought to you by Precious Metals International. With the media pounding the table for a rate hike in June, and Federal Reserve officials making public statements that seem to be leaning in that direction sooner rather than later, all eyes will now turn to the Non-Farm Payrolls report for May, which is due out next Friday. Next week's shortened trading week due to the upcoming Memorial Day holiday may also mean that market volatility is muted, ahead of the release of the jobs report. The number of Americans filing initial claims for state unemployment benefits dropped another 10,000 claims last week, falling to a new seasonally adjusted level of 268,000 for the week ending May 21st. The previous week's data was unrevised, and the 4-week moving average of claims, which most economists believe to be a more accurate measure of unemployment, increased by 2,750 to a new level of 278,500. First quarter U.S. gross domestic product, GDP, was revised upward this week, but the revision moved the economic growth figure to just 0.8%, which remains an abysmal statistic and represents the weakest quarterly performance since 2015. Economists are trying to spin the poor data showing for first quarter GDP as a data error in the calculations that the government uses to strip out seasonal variations in the data. These same economists seem to be ignoring the fact that those calculations were adjusted to be more accurate last year after the same claims were made back then. Donald Trump officially clinched the nomination for the presidential candidate for the Republican Party this week when he passed the magic 1,237 delegates required for the party to declare him as their candidate at the upcoming Republican National Convention. Mr. Trump remains polarizing in his public comments, and his political rallies continue to be focal points for anti-Trump protesters, many of whom often turn violent. Hillary Clinton took another blow to her run for the Democratic nomination when a report was released this week confirming that her use of a private email server during her time as Secretary of State likely violated State Department rules. The U.S. Department of Commerce slapped additional duties on corrosion-resistant steel products from China, India, Italy, Korea, and Taiwan, citing an investigation that it had conducted which found the dumping of imports of corrosion-resistant steel core products from various steel manufacturers in these countries. The move comes on the heels of another set of tariffs, a staggering increase of over 500%, that the U.S. imposed last week on Chinese cold-rolled steel products, which are commonly used in the production of appliances and cars. China's Commerce Ministry, calling the move irrational, said that China will take all necessary steps to strive for fair treatment and to protect the steel companies' rights. The Commerce Ministry did not elaborate on what those necessary steps might entail. The European Union is also rumored to be considering its own round of anti-dumping tariffs on China's steel industry. Prime Minister Shinzo Abe warned at the so-called G7 summit, which he is hosting this week, that commodities prices have fallen 55% since 2014. Mr. Abe pointed out that this is the same margin that commodities prices fell during the global financial crisis, and the comment immediately triggered comparisons to the Lehman moment that occurred at the onset of the crisis. Mr. Abe may simply be setting up a way to delay a planned sales tax hike in Japan, since officials have long been saying that they would only postpone the sales tax hikes if there was another Lehman-type shock to the global economy. A second straight month of falling consumer prices in Japan may be what is behind the comments and comparisons to 2008, as Mr. Abe watches the Bank of Japan's 2% inflation target slip farther and farther away. Crude oil prices broke through $50 a barrel this week before dipping back into the upper 40s on Friday. The move put oil at a 7-month high and appears to be due to supply reductions resulting from unplanned outages in Nigeria and Canada. Militant attacks in Nigeria have sent oil output plunging by over 800,000 barrels per day, and the massive wildfire in the oil sands region of Canada has sent their oil production down by roughly the same amount. Since Canada is one of the largest suppliers for U.S. crude inventories, U.S. supplies have begun coming down, just as the summer driving season is set to begin. If the outages continue into the summer travel season, oil prices could continue to recover as the global supply glut grows smaller as stockpiled oil is used to make up for lost production. The euro trended downward against the US dollar for much of the week, seeing a steep vertical drop on Tuesday, before finding a floor on Wednesday and attempting a recovery. The euro drifted upwards against the dollar through Friday morning, but saw another steep sell-off on Friday that sent it dropping near vertically again, and the euro will close the week lower against the US dollar. The Japanese yen began the week climbing against the US dollar, but had found its peak by late Monday and then began moving lower through Wednesday. The yen saw a vertical surge to the upside on Thursday that sent it back to positive against the dollar for the week, but it could not maintain the momentum and traded basically sideways in a series of brief spikes and drops through Friday, when another steep drop hit the yen. Despite Friday's drop, the yen appears set to close the week higher against the US dollar. As we enter a long holiday weekend, it will remain vitally important to monitor global news outlets for events outside the US, which could affect markets when they reopen on Tuesday. Next week, we will begin the month of June, and we fully expect the media to begin a frenzy of reporting on the possibility of a rate hike by the US Federal Reserve. We also expect the media to continue to engage in rampant speculation over the outcome of the referendum in the United Kingdom over whether to exit the European Union or not. The summer travel season officially kicks off this weekend, and the lower price of gasoline as oil prices have continued to languish could see a surge in travel across the U.S. Economists are hopeful that the upcoming vacation season may also finally trigger a boost in consumer spending, which has been sluggish at best since late 2015. Next Friday, the Non-Farm Payrolls report will be released, and media and investors alike will be closely watching that report to see if last month's report was simply a one-off or if job growth in the U.S. is truly slowing down. The lengthy strike carried out by Verizon workers could have an effect on Friday's payrolls report, as economists estimate that the strike could show up as a decline of roughly 35,000 jobs. The upcoming Memorial Day holiday may also have a dampening effect on the report, since some employers may have chosen to hold off on filling open positions until their prospective candidates return from any previously scheduled family vacations. At the Group of Seven, also called the G7 Summit, global leaders of the world's 7 leading industrial nations warned that a vote to leave the EU next month could seriously threaten the global economy. In a statement made at the meeting this week in Japan, the group said, a UK exit from the EU would reverse the trend towards greater global trade and investment and the jobs they create, and is a further risk to serious growth. There has been much speculation that polls in the UK, which are trying to predict the outcome of the vote, might not be accurate, due to various factors, which means the outcome really cannot be predicted with any degree of certainty. Consumer debt across the globe appears to be turning into a hot topic, particularly in view of the massive debt also racked up by global governments. The growing global debt burden is leading some analysts to speculate that there may be another debt crisis looming in the near future. Continued supply disruptions in oil production, particularly in Canada and Nigeria, could lead to a near-term lift for oil prices, but some analysts are predicting that any such price rise will be brief, as OPEC members and other countries ramp up their own production to make up for the slowing supply. China's economy also continues to be a concern and a drag on global growth, and new tariffs on its steel industry put in place by the US and possibly the EU as well may have further negative economic impact in the near term. Greece may have been able to release another round of bailout funding, but the debt-laden country's problems are far from being resolved. The International Monetary Fund (IMF) continues to push the rest of Greece's international lenders for immediate debt relief, which would see write-downs for some of the debt owed. The other members of the troika of lenders have said that they will consider no such debt relief measures until 2018 at the earliest, if needed. At a news conference following the agreement to release the latest bailout funds, IMF European Department Director Paul Thompson said that the Eurozone must lay out exactly what debt relief measures it will be prepared to take in 2018, and added that we will need to assess the adequacy of the measures, and we will only go ahead if there is an assessment that they are adequate. In other words, if the Eurozone fails to come up with a satisfactory debt relief plan for Greece, the IMF may back out of the bailout deal. As we continue through a period of global geopolitical uncertainty, wise investors continue to seek out buying opportunities that allow them to add additional physical precious metals to their investment portfolios to assist in diversification away from overexposure to any single market. These wise investors apparently view temporary price dips simply as a way to acquire more physical precious metals for their portfolios at a discount. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, May 27, 2016. Brought to you by Precious Metals International.